Hello, investors, and welcome back. Let's take a look at SNDL. This is a stock that I've covered many times in the past. It's been a while, so I want to brush it off and tell you about some catalysts that are coming up. But the first thing I want to do is I want to take a look at the charts, and this is just one aspect of an equity that you should take a look at because your job as an investor is to predict the future outcome of the price to decide when to get in low and when it is of best value to buy, cost average down, or to even sell your position. So, in this market environment, I believe you definitely want to be greedy with your money. So let's get started right here, the middle of last year. This was the reverse stock split. That's what the S stands for. We talked about this going into a reverse stock split, that there's going to be pain on the share price. This was a buying opportunity here for about 5 days. This had a price of about $224. You can see that over here on the right-hand side of the screen, about $224. That's where it found support. Of course, it wicked down below that and went as low as $213. And then very shortly after earnings, went up to $3.60 almost. We talked about this going to $3.50 as far as the net asset waterfall that Zach George released the day prior. So we were looking for that to really grow some legs, and then it did. It sold off until it was nearly oversold close, but down here at about 32 on the RSI. If you follow this over, you can see it was right there at 32. Then here previously it hit about 35 on the RSI, but this has never actually went under this trend indicator, the 30 on the RSI, into oversold. It's definitely been below 50, but here was another opportunity right here for about 3 days that it went under $2. Here again, it went under $2 for about 5 days, and now we are under $2 right here at about 194 for about the same period of time. I think we see it down here for maybe one more day, but this is a buying opportunity, in my opinion, given the macroeconomic indicators and the microeconomic indicators. What I'm expecting to happen is that we are going to start trending up leading to earnings, and we've seen this happen a few different times. We've seen it happen here. You can see the earnings indicator here, the earnings indicator here, and it started to trend up. Now, typically I don't like to guess, and I don't think it's smart to guess what's going to happen leading into earnings, but Zach has given me enough indicators to believe that we are at a trough in the market in general. It's difficult to find a bottom, but there are a number of catalysts coming up. And if you are a long-term holder, then you're not worried about the volatility. You just know if it gets any lower, it's just more of a buying opportunity. But I do want to be conservative with the type of price action that you can expect with this. So let's just show you in the last month, this has only had about a 28% potential decline or increase. So it's went from this point here to this point here is about 28%. So that's what you can expect as far as a potential upside, as far as what this is priced in, equities in general. Of course, we all want it to be much better than that, and there's no telling how the market might tackle this Sunstream news or what kind of excitement might come out of any progress that's made in Germany or even federally. You could see that we could have a run-up that could be much larger than that, but we'll have to take this day by day. And if anything dramatically changes with the share price, I'll come back on here and I plan on doing an update video. Now let's do a comparison with Tilray, because I always like to compare this to Tilray, and I believe that Zach George is always paying attention with what's happening with that company. He said in his interview on last Thursday that he's watching his Canadian peers and what they're doing in Germany, but also institutional transactions, 32.91%. Here, we're seeing low volume across the board, and it's understandable. And there's a number of reasons. We have delays on the federal side in the U.S. and the Safe Banking Act. In Germany, looks like it's being postponed, but anything could change at any moment. We've also got news articles that are coming out that are saying daily use increases the risk of heart disease, study finds. So there is some pushback there, of course, daily use. And the findings will be presented at a cardiology conference in March. So expect that there could be some volatility still in this price, even though SNDL specifically, I'm expecting some catalysts to come up very soon. We're going to talk about those in just a moment. Now, pharma is also doing some things behind the scenes. I don't have any proof of this, but I'm convinced that pharma is not a fan of medical cannabis because it's hitting their bottom line. So be sure to check that out. Make sure anytime you've got these articles coming out, you know who's writing them and who's funding them, because I believe pharma can push people around. So last week, Thursday, February 23rd, we had this agenda at 10:30. I was dialing in early to listen to what was happening with Glass House Brands OTC trade, GLASF. Check this out. Looks like they got a lot of real estate at pennies on the dollar also. They're playing just like SNDL, but very interesting operations because they are a grower of tomatoes and cucumbers and trying to transfer that real estate into very high-tech cannabis growth. So let's take just a quick look at an article that I found going from red to green. Glasshouse converts a tomato farm to a high-tech facility for cannabis cultivation. I caught the end of that video, but I just want to put this on your watch list. It's not in a buy zone right here, but I will be bringing back daily updates on my Patreon page. Be sure to check that link out below. It's going to be the first tagged comment down below the video. So SNDL, Zachary George, CEO, moderated by Frederico. Man, this guy killed it. He did a great job. I hate seeing videos where they're interviewing people and they're throwing these softball questions and anybody could keep up with it. I mean, there's a lot of those from Davos, if y'all watched any of those interviews, but I'll tell you what, man, Frederico, hats off. Great job, man. You did a great job. And Zachary, thank you for being completely transparent. So let's talk a little bit about SNDL. We've got a lot of moving parts. We got Nova Cannabis. We've got the earnings coming up in March. So what's happening with Nova Cannabis? We've got a 63% equity stake that we can't keep. So 20% of that can be kept by the company and probably not. They probably won't even keep 20%. So what's going to happen with the other 43%? It's going to be given to current shareholders. So if you're holding this company, you could get those dividend spinoffs. Now, proposed acquisition of Valens, that already went through. It was finalized. We're going to talk about that briefly. So let's get straight in to this net book value of $4.77 when the slide was done. The share price was $2.60. Let's go back here because I want you to know that this was sitting at 191. I tweeted it out yesterday in preparation. If this pulled back any further, I said this is very interesting at 191. It's been sitting at 194. So if we go back here, you could just see at that time it was at 260 when they released the current share price. And let's talk about a quick company overview because we do see the cash strategic investments in Sunstream. We've got a current share price and net value of $477. Brick and mortar footprint is larger than it's ever been in SNDL's history. With all of these acquisitions, they currently have 358 locations, 170 on the liquor side and 188 on the cannabis side. And they have line of sight in the next 30 to 40 doors within the next 12 to 18 months of cannabis retail segment growth. Debt-free balance sheet, 200 million Canadian dollars is what they have with no debt. Capital preservation is definitely their focus, and they are focused on free cash flow. Bigger is not better, more profitable is better, and they understand that. They are tackling massive cost savings opportunity like most businesses in the same sector and even just across the board in this macroeconomic environment. Now, the company does not plan on giving earnings guidance at this time, and this is something that we see some companies do, and they're blaming it on the lack of visibility and volatility in the space, but I believe that that's just crap, to be honest with you. I think that they should be able to use their data, their inventory, their sales, their operations, their planning, and they need to make the investments. They need to bring all of these pieces together and come up and develop a good way to project exactly what they expect to hit so that way they can assure those gaps and they can do that scenario planning to flex whatever they need to do to meet their growth opportunities. So I think they're kind of using the volatility in the space and lack of visibility as an excuse. It's easier to say that than it is to come up with a metric, hit a target, to fill those gaps, to do appropriate planning, use the data from the retail space locations, roll that up But I believe they've got a lot of different systems and processes, and they're trying to stream these all into one source, and it's difficult. And I think they've got to figure that out. So that's one thing that I'd like to see them get fixed. Also, with Zenabis, the assets were acquired at pennies on the dollar, so at attractive prices, and they're looking for alternative uses for that industrial space. So Zenabis, for those of you not familiar with Zenabis, that is the medical side, medical cannabis side of the business that had a little bit of active export in terms of sending cannabis outside of the country. So we'll have to see what those numbers look like. Zenabis should be reported in this quarter coming up, and they're in discussion with a number of parties looking for contract grow opportunities. So you know how I was talking about that company was doing tomatoes and cucumbers, and they were transitioning over to cannabis. Now think about all of these facilities, all of this footprint that we have, these facilities that are underutilized right now because of the demand, the oversupply and under demand, oversupply and under demand of cannabis in the sector. So now they're trying to figure out what to do to maximize these facilities that they have, all of this square feet, because they are ready to scale. They're looking for those opportunities to enter the North American market, and they've been doing this for about 4 years, and they're also looking for expansion over to Europe and even Germany. So there's been a reduction of footprint in order to reduce expenses. So that was encouraging news to see this come out. A couple of weeks ago, 85 employees from the Olds facility, part of a larger phase cost savings program that is expected to deliver close to $9 million in savings as far as labor and operational costs. And these are some of the easiest levers for the company to pull. And I was expecting this to happen. I am reassured that Zenabis may not be a leech that's going to cause this company to bleed money. Remember, all of these pieces were not successful and caused pain, and this was actually a portion of Hexo that was spun off previously. Now let's talk about Valens, because that transaction closed in January, and Valens brings a competitive advantage as far as manufacturing capabilities to SNDL. In early December, there was an integration plan to bring Valens team members on board, and it looks like they're going to be doing some severance costs, one-time cost charges in Q1 to lean down the team even there. They're focused on lab extraction, automations, and pre-roll categories, concentrations, edibles, and beverages. This is the R&D portion of the vertical integration. Valens is going to enable them to be competitive as far as coming up with new products to delight consumers. And SNDL expects to be meaningfully outperforming the guidance that was given in terms of cost savings. So they are cost savings focused. Now I do want to talk about Nova Cannabis for just a moment, because we talked about this just briefly on this previous slide. You'll see Nova stores, and specifically they've noted in here 63% ownership, because they want you to know that it can't stay that way for very long. Now, a licensed producer, LP, you'll hear them reference LPs all the time. That's a licensed producer can only own 25% of a retail license. So they can own no more than 25% of a retail license. Well, in British Columbia, and we're talking about the provinces up in Canada, British Columbia, it's only 20% that an LP can own of a retail license. So SNDL has been a sponsor of this entity of Nova Cannabis. They've provided them with financing. They currently have a 63% majority stake in the company. And Nova is working through a transaction, and the vote is expected to take place in the first week of May, and a closing shortly after that, and a dividend of Nova shares at closing is expected. So this is another catalyst. This is like the third catalyst for SNDL going in the days, weeks to come, March, and then even May. So this distribution is going to happen as the reorganization occurs. So this has some potential. I can't tell you what kind of potential, but we're going to be monitoring this leading up to this happening. Now, business rationalization and the process is happening. it's still transforming as far as cannabis industry, business failures, exits from the market, closures, a steady stream of bankruptcies. And you can actually Google this and find out how many pending bankruptcies there are and see which industry they belong to. But these licensed producers and restructurings are happening. It's even happening with SNDL themselves. They're doing these restructurings. You can expect portions of the business to spin off, and in Ontario specifically. And in the next 24 months, the industry is going to look a lot different than it does today. You think it looks different right now? There's still going to be even more changes in the next 24 months. Now, this industry is 4 years into legalization in Canada, and the market is in the process of being in a drought. It's in this low period, and if we go back to the chart, you remember you've seen it kind of flattening out, but it's just been in a downtrend, and there's price compression that is well below the marginal cost of production, and this is not a sustainable dynamic according to Zach George, and it's going to cause some people to fold, to default, and prices should recover from this point. And as prices recover and we figure out who can make it in the market, they are going to be able to charge just a little bit more. And let's transition over to international cannabis markets. I want to talk about Sunstream because this is a big topic. I believe we're going to get some updates. This is another catalyst. This is like the fourth catalyst. I expect to hear something about Sunstream and their investments, that joint venture, the deployment of 500 million Canadian dollars into a series of senior secured and other structured credit opportunities where these North American companies could be defaulting on their loans, and they will be forced acquired their assets and their company by SNDL, giving them an entry into North America. So SNDL is sitting back. They are going to take a non-active approach and just allow this to happen. Now, updates are going to be coming before the earnings release at the end of March, and there's massive cost efficiency efforts that are underway right now. So as far as U.S. operations, at some point, SNDL may have effective control of vertically U.S. operations that they might not have a choice. And SNDL, Zach George specifically was talking about Florida and Michigan, and he had a few examples of acquisition loans where they use these to acquire assets as collateral to secure the loan, and it looks like they might not be able to keep up with it, potentially defaulting and being acquired by SNDL. Now, North America is the focus versus Germany. Germany, I don't see being the focus as much. I think they're going to sit back and just see what happens here. This potentially could get delayed, but I did read this article in Germany where it says measures could be taken by the end of March or even sooner. So there could be a catalyst for the timetable for cannabis legislation as far as January 30th, 2023. This article came out, but Germany plans to legalize cannabis in 2024, likely delayed. So will this get pushed to 2025? Now I want to go over options because there has been some traffic as far as options. You want to push those options plays out if you just don't want to secure shares. Some people like to play the options game. There's a few things that I recommend July 21st, and of course, I'm going to roll this all up in the Patreon for those of you that are contributing to that. I'm going to put that information down below. But just to keep it short, July 21st, I want you to pay attention to that. And this was also mentioned in the Discord, January 19th, 2024. I also want you to pay attention to that. Obviously, $250,000 worth of options being played down here for the $5 strike price. We were talking about this down at 13 cents, and you can see had a nice little climb of 21%. Options can be a very profitable way to take some money and put it in your pocket really quick. You don't wait for it to reach that strike price. You wait for it to hit that resistance line and then, or even that catalyst, and then it takes some of that money off the table, and then you can play the downside, those puts on those also. Now, we've got 4 analysts price offering 12-month price forecast for SNDL, median target of $342 and a high estimate of $395 and a low estimate of $294. And the last price was, we know, it was about $1.95. Of course, it says $202. I'm not going to refresh it, but this is upwards of about 89%. So it's not even 69%, even though that's a great number. So let's take a look at the price to sales trailing 12 months. 1.22 is current, 2.29. You can see historically this has been anywhere from 15 to almost 27, a little over 27. So I remember this was 18. I mean, this has had trading multiples of multiple times. Anything under 3, I think you're just getting a great deal on this. Now, of course, you want to monitor and manage your expectations with this play, just given a number of catalysts that need to happen for them to really be able to scale, because it's all about revenue, it's all about scaling and profitability. But even on tip ranks, we've got one hold here with 84.62% upside. That's all I've got for you. Be sure to hit the subscribe button if you're not already. We like to do deep dives on stocks specifically, but this place is a beast. I mean, they really did an effort with their liquor and retail brand. Even though that's a mature market for them, they've got a data and loyalty program. They're expanding with their wine and beyond beverage. They acquired a license that was previously government owned, and they're looking to get a second. They've got a low store count per capita, meaning SNDL will stand to benefit from this new license in that area. So Alcana was in the U.S. market and decided to exit those markets. So I'm not looking for them to expand as far as their liquor footprint. Alcana's had some trouble in the past. If you watch my videos, you know their stores were getting robbed. So it looks like they potentially got that fixed. It's concerning to me that they've never addressed that. Guess that wasn't a huge hit to their bottom line, but I do think it did not attract people to come to their liquor stores, and maybe why you're seeing more traction with their wine and beyond stores. So look for potential liquor spinoffs in the future, multiple spinoffs with this company as they rationalize what they want to keep. We've got the dividend spinoff. We've got multiple catalysts with SNDL that you can look forward to. Be sure to buy low, sell high. That's all I got. This is Randy. I'll see you in the next video.